Okay, guys, credit cards have you down. We've all been there. We've all been in a position to where we got our first credit card, maybe didn't understand it. This is why I'm so passionate about this. You know, I have two kids that are older, and we went through when they were young, understanding credit cards, how they work, and here's why. There's a lot of stuff that the credit card companies don't want you to know, and we're going to talk about those today. So a couple things that you want to know that you may not know. There is a day that you need to make your credit card payment each month in order for you to not pay interest. It's really important that you understand what that day is. You get a little pamphlet when you get your credit card that explains all this information to you, but it's in little writing and it's a lot of information and we usually don't look at it. So I would encourage you to go online, read up about it, your specific credit card company, or just give them a call and find out. What day do I need to make my payment so that I'm not paying any interest? Because you may say, hey, Kristen, I'm good. I pay off my credit cards every single month, so I don't have to worry about that. I bet you if you went back and look at your statements, if you weren't aware of this, that you paid some interest, that you've actually paid money to use the credit card when you thought, but I'm paying it off every month. Because interest does start accumulating on a specific day. So first, know what day that is for each of your credit cards. Second, if you don't have it set up to where your minimum payment is being made every single month, no matter what, I encourage you to do so if you can. Now, some credit cards company don't have that option. A lot of them do. You just go online, you set it up, say, I want to make the minimum payment, and you're set up. Why do I encourage this and why is this important? If you get sick, if you're in the hospital and your payment's due and nobody knows that it's due, guess what? You're going to have a late payment, and it is so hard to overcome a late payment, even if it was a small amount. So make sure that it's set up to where at least you have the auto pay for the minimum payment, but don't ever make the minimum payment. So if you can't afford to pay the monthly payment, this conversation around, we really need to be looking at your budgeting practices. Things do come up, but I encourage you to have an emergency fund, which is a separate savings that's 3 to 6 months of your expenses that is a separate account that I say use that as your credit card, meaning that when things come up, you're taking it from that and then you're replenishing that so you're not paying any company to borrow the money. So that's the first thing is you want to have an emergency fund and a budget set up. I have a course, happy to send it to you to help you with that. If you need it, just message me, DM me, happy to get that to you. But let's say that you didn't have that and now we're trying to figure out a plan moving forward and you have your credit cards that you use sometime. Make sure that you're paying it off before the time frame, before interest hits, and make sure that you're always making more than the minimum payment. It helps your credit rating. So even if you're in a position where you're like, I can't afford to pay it off, don't make the minimum payments. Always make more than the minimum payments. That way it helps your credit since you have the credit card. Other thing is, if you have a credit card, you do want to call each year and request a line of credit increase. This is called your balance to limit ratio, meaning that when you do charge or if you have a balance to however your limit is, that is rated by your credit. So that's going to help your credit. Now, obviously, we're not increasing the line of credit so that you could charge more, but it is helping to start build your credit profile. If you're a parent and you're wanting to help your kids with credit, when my kids turned 16, I added them to my credit card so that when they turned 18, they had over, really high credit score. And then they got their own credit card and then they can open up a second credit card the next year. And that way they have 2 credit cards, which is ideal so that they can start building their history so that they could buy a home as soon as they graduate college. Very important that you have the conversation with your kids about managing the payments and credit cards. Now, when you put them on your credit card, they are an authorized user, which means they're authorized to use the card. You can hold the card, keep it. You don't have to give it to them. But if you want to give them a card, mine used it for expenses and stuff like that. So they had a card, but explain to them, and you're the one that's liable to make the payments. So you are the one that's going to have to make the payment on the account. They can have an authorized card where they can charge and use it, or you keep the card. It's just helping to build their credit. However, once they turn 18, they get their credit card, sit down with them. Now that you're going to understand these things, sit down with them, explain to them, read it with them, explain to them the impact the late payment can have on their credit, explain to them that if they charge something, they need to have the funds to pay it off and the date that they need to pay it off so that they don't have to pay any interest on it. And that way they understand the importance of credit. Having a late payment on your credit can take you many years to recover your credit and cost you a lot of money. So it's really important that they understand that, as well as setting up, like I just explained to you, the minimum payment so they never have a late, especially as we're, our younger adults, making sure they understand that because things can happen. They could forget, if they're in school, they can have a hard week and forgot, things like that. So you want to make sure that they're set up for success with that. So it's really important that they understand that. So you want to make sure that they have all that information and that all of that is set up. And that way you don't ever miss a payment and everybody understands how interest works. Now, what is interest? A lot of young adults don't understand what interest is. Well, it's the fee that the lender charges for borrowing money. Now, we all need loans. Unless you came into a lot of money, you need a loan to buy a house. So not all debts are bad debts. You need sometimes to get a loan to get something that's going to give you a better return on your investment, such as owning a home, or maybe you need a car. So you need to get a car loan in order to get to work, which is going to make you money. Now, do you need to get the $75,000 car? No, you can get a more affordable car that's within your budget, but you may have to take a loan initially and then you build up from there. So not all debt is bad debt. Credit cards, I don't love. I know that it's there as kind of a emergency. Now, I use my credit card, and my husband and I use our credit cards for everything. So I have a business credit card. I use it for everything. And then we have a personal that everything that we can charge on it, we do. However, this is more of an advanced step, meaning that you have to already have the discipline that you always pay it off to where you pay no interest and that you're managing it well. But why do I do this? Because I get points. So on those credit cards, we take trips, we get hotels, we have tons of stuff that we get free because we are managing our credit correctly. We are using the credit cards to pay everything, which is huge for security. So the other added benefit of it is by putting everything on a credit card, if somebody swipes my information from a company where we paid something, I can call the credit card company and they will refund them money. They will put in a claim. If somebody gets my bank account information, if I use my bank card for something, then it's a nightmare. And they could take all your money from your account and drain you. So I do encourage, for security purposes alone, use your credit card as much as you can, but I divert. So if you have your credit card and you put everything on it, you can earn points if you're with, we have a lot of Chase cards, things like that have high points where we can use and get free things such as hotels, cars, and all that stuff that we do every year. So there's bonus that you get for being good with credit cards. So there is a purpose that you could use your credit cards, but you need to make sure that you're paying them off before you pay any interest, because you could pay a lot in interest and most people don't realize this. So if you have credit cards, I encourage you, go back through your statements, see how much you've been paying on those credit cards, because it probably will shock you, the amount that's on there. So let's just dive in. I'm going to go ahead and share you a couple things here that you're probably going to be disgusted with, like I was initially. So let me put me here. Let's look. Okay. So what I want to look at here, and I'm going to put this below. There we go. So you can see me here. So let's look at this. I think it's important to see things visually. Share this with your kids. I think this is really important for them to see because visually they can understand it more. Share it with your loved ones, your spouse, whoever needs to see this that doesn't think that it's bad to carry credit card debt or make the payments fully so you're not paying interest. So this is just a normal scenario where I went through some financial planning with a client in regards to getting their budget and all that kind of stuff situated. So they have a card. You can see here, creditors, card, auto card, student loan. What's important is understand what's my balance, what's my rate, and what's my payment. It's funny. I have people want to come, they purchase a home and they see interest rates. And right now in the market, we're in like mid sixes. Like, oh my God, I don't want a 6.5%. I'm like, but you have like a 20% blended rate on your credit cards. So understanding rates is really important too. So on your credit cards, of course, they're not going to show you, hey, you have a 21% rate. They're not going to disclose that to you in a way that you really see it, but it's there. Most credit cards are 21 to 19%, maybe even higher. Check yours out. You can see it online. So you put all this in here, and I'm happy to share a calculator with you, this that I have. If you want to look at your debts and create a plan, happy to share that with you, as well as my course. This helps you, and it's completely free. I'm just on a mission to help people with wealth. So happy to share that with you. Reach out to me. I'll get you the link. So if you look here, you can see here, this person has $26,500 in debt. Their minimum payments on all of this is $349 a month. If they continue to pay only $350 a month on those minimum payments for what they owe, they will not have all of their debt paid off until June of 2048. Now, I did this last month, December. So from December, they will not have all of this debt paid off till June 2048. 48. And they will have paid $76,000 in interest for $26,500 in debt. I'm just letting that sink in because it sickens me. I'm sure it will sicken you if you have debts as well. So really important to be able to look at this and be like, oh my goodness, I had no idea, because we don't think about it. You're like, okay, what does that even mean? 19.99%, no big deal. But you could see here, you're not going to have it paid off till 2048. This is why we have such a huge issue with debts in society today. We have that instant gratification where we want it right then. Save and buy it. Unless you need it right now, save the money and then go buy it. You don't want to pay the additional interest of how much it's going to be, not to include inflation on top of this. I mean, it really is one of those things that is it's nasty. So now let's look at this. What if you were in this position? You say, Kristen, I know this is terrible. I got myself in this position. What do I do? Great. I'm glad that you asked me. Budget, budget, budget. Make your money start working for you and saving you money. And what do I mean by budget? Again, I have a course for you I can share with you if you need help. Sit down and look at all of your expenses. Everything that we have outgoing, I go back and look at the last 6 months of your bank statements, credit cards, whatever you use, highlight everything that is a must, and then look at everything that's not a must. Where did you spend your money? Where did it go? How much money can you free up? How badly do you want to save that $76,000 that you're going to pay in interest? You need to get to a place where it is more of a priority for you to pay off that money so you don't pay the credit card company $76,000 in interest than it is to go get that lunch or that coffee or that new pair of shoes or whatever it is that you're spending your money on. You need to first sit and get your mindset that no matter what comes up, I am going to focus on saving as much money each month that I can redivert to paying this debt off so that I am in a position that I am not giving the credit card company $76,000. I will have that money to be able to invest into things that are going to give me wealth and help me into a position to have the life that I want, the retirement that I want, and have financial freedom. So that's first and foremost, because if you don't get that under control, this is not going to work for you. So you need to get to a place where you are committed. You are committed. You have things on your wall, on your mirror, wherever it needs to say, I am the type of person that pays off the debt. I am the type of person that saves. I am the type of person that makes my financial well-being a priority. Sounds silly, but it works. Put it up everywhere that you could see it as a reminder so that when you walk into that store and you're like, oh, that is beautiful. But it's more beautiful not to pay the bank $70,000 in interest, right? So having that mindset is really important because look, this is what we can do. You take all your debt and instead of paying $350, let's say that you found an extra $650 a month. So you say, Kristen, I'm on it. We're doing no trips for the next year so that we can get this paid off. We are in it. We are getting this paid off. So now let's say that you have an extra $650 that you found that you can invest. So now you spend $800 a month. So instead of the $349, you spend $800 a month and you start paying down these debts. Well, this calculator shows you where to invest the money. Typically, you want to start with the highest interest rate first because that's where you're going to save the most money, right? Some caveats to that, but for the most part, start with the highest interest rate, meaning that you pay the minimum payments on everything else, but you take the rest of the money that you have and you sock it to that one credit card that has the highest interest rate until it's paid off, then the next. Look at this. So remember on the last one, you would have paid it off in 2048. Now you're down to May of 2027. You have all your debt paid off by May of 2027. Yes, it's going to be a couple years that you're going to have to buckle down, but it's only a couple years. Imagine if you don't. You're only going to get spiraled more and get in a position where you won't even be able to pay off the debt. And look at how much you're only going to pay in interest. By doing this, you save massive amounts of interest. I mean, 70-something thousand to less than $6,000 that you're going to pay in interest. What's the priority for you? What could potentially be more important than putting yourself in a financially secure position? Things come up. Yes, I understand that. But you are in a position to make decisions for yourself to make a better future and put yourself in a better financial position. It may be a couple years that you're going to have to buckle down. It may be a couple years that you're going to have to tell friends, sorry, I can't go. Let's do game night at the house. There's different alternatives that you can spend time with people because I know that's a big thing, as far as where finances go. And usually it's social type things, right? So it's really important that you understand that because it is going to be, it's going to cost you something. But what are you going to gain from it? I mean, we're talking 60-something thousand dollars that you're going to gain from it. Is it worth it to you? Is it worth it to your family? Is it worth it to your kids? I divert. So this is what credit card companies and lenders don't want you to know. How much you're going to pay. There is no return on investment with credit cards. There is no return on investment of personal loans. You just have an expense. So make the decision today to really dial in your budget, to really look and see what is it that I need to do today? What action can I take? If you need help with this and you need the calculators and all the access to the course, happy to help you. I am on a mission to help people with wealth and to not give the credit cards money that they shouldn't be getting. So please share this with your friends, family, loved one, kids. Really important to start them off young. And hope that you are going to be in a better position in the next couple of years, that you make smart decisions today to save and create yourself and your family wealth.